All right, welcome back, guys. We're going to get right into it. Anybody who's new, on this channel, we cover swing trading primarily. It's not really a day trading channel, more of a swing trading channel. I try to give general market analysis, and I do put out swing trade ideas. Everything on here is my opinion. Nothing's trading advice. So let's get right into it. What we're seeing currently in the market is we're seeing this flip-flop action. We're seeing the market go from buying only the FANGs to buying the rest of the market. And then they flip and buy only the FANGs, and then they're buying. It's kind of this inching market where the FANGs are leading a little bit, and then the market's kind of catching up and they're buying the rest of the market. And that's what we're seeing today. We're seeing the rest of the market being bought, not impulsively, not, a huge move up, just kind of a grinding move. But and then the FANGs aren't really being bought, besides obviously Apple and Facebook, but they're not all being bought. Yesterday was more of a FANG day, and it's just interesting to see that. So let's get right into what I see. So I'm going to start this one out about the dollar and gold, because the Fed is reporting their minutes today. They've got a conference and they've got their minutes. So let's talk about that real quick. So the Fed highest probability is that the Fed does not raise rates. They do not lower rates because they're pretty much at zero, so they'd have to go negative. So it's extremely low probability that they raise or lower rates. Pretty much priced in that the Fed does nothing. They're probably not going to do anything with the rates, and they're most likely going to just jawbone the market, saying they're going to continue supporting the market with their current bond purchasing programs. And that's what they're going to pretty much talk about. Now, if they do anything outside of that, be ready to pounce. If they raise rates, then be ready to essentially short the market. And again, just my opinion, but if they raise rates, short the market, short gold. You'd want to, long the dollar. And if they cut rates, then if they cut rates, I'm not exactly sure. I don't know if the market's going to like that or if it's going to be spooked. I would expect gold to rally and the dollar to really fall hard in that scenario. But again, those are the extremely low probabilities. So if they do those moves, there will be large moves that take place very quickly. So lots of opportunity if you get any kind of outlier decision by the Fed. But the highest probability is they do nothing. And here's what I'm seeing in the dollar right here on my chart. The dollar has been falling recently. And obviously, if I look at the daily chart, there's a couple things that I'm looking at. One, you have a major trend line that was broken just recently. Here, this goes all the way back to 2011. And basically, here's your trend. We've been walking up that really for years now. And as I zoom in, you can see we recently broke that trend. That's this green line here. We broke it. I'm expecting a back test of this trend line. Usually when you get an impulsive breakout, you come back and do a back test. So I think we're going to get a kickback rally to back test this 95 area on the dollar. And here's why I'm seeing that. One, you've got this breakdown. Here's an hourly chart, and we just broke this level of 92.50 basically. We broke it just the other day. But again, this is a move in the dollar that's taking place before the Fed. And the Fed is all about the dollar basically. They move the dollar and gold and all that. The gold has been rallying, not based on the pandemic. Gold started rallying in 2018 based on the Fed. When they stopped hiking rates and started cutting, gold started rallying, and gold's been in a bull market ever since basically. So to see a move before the Fed is suspicious. And we broke down right here, but now we're doing a kickback rally and starting to recover. So if the Fed minutes come out and the dollar pops above this 92.50, then that's going to be a false breakdown, a bear trap. And that sets in motion the move that I'm talking about to run up and do a back test of this 95 area. If that happens, gold should fall. So let's look at gold here. Here's gold bullion. And really what we did is we overshot this resistance level of 1790, overshot it impulsively, ripped higher. While doing that, the RSI became extremely overbought at 90, sitting at 90 basically on the RSI. So it's a momentum move that you just don't want to chase when it gets so overbought like that. At least I prefer not to. And we overshot that 1790. I get that all the way back from the resistance that was put in back in 2011, 2012. So the same kind of deal. When you overshoot a move and overshoot a level, you should come back in at some point in time and do a back test. So I see gold falling down to the 1790. That looks pretty supportive in that area right now. I think that's probably the area that I'll be looking to start going long again, the gold miners. And so we're going to look at that. But until then, I think we're going to get down moving gold, up moving the dollar. And so what am I doing? I'm shorting Pan American Silver as a leveraged play against that dollar gold move. Silver's kind of leveraged against gold, and a silver miner's leveraged against silver. So lots of leverage here. And so I don't need a huge position, but it's good enough. And here's what we got. Uptrend line right here, looking at a daily chart. We broke and we did a kickback rally. Right here, see this candle? It kicked back. It's a gap fill. You broke down impulsively because you broke the trend line, and then you had a nice impulsive gap with selling. So that's a nice impulsive breakdown. That's what you want to see when you're breaking support. But you're not gonna just continue to fall straight down. You're gonna make waves down. And here's your gap, here's your kickback rally, and it ran right up to the gap. That's resistance, and that's exactly where it was rejected at and started to sell off. If I show you on the hourly here, show it a little clearer. There's your kickback rally right to gap. So that was an objective area to add to a short position and starting to roll over. So this thing, I see it heading down. We've got another gap right here. So I see 30.50 in the cards. And actually, if I extend that out, you can see that was pretty good resistance back here, and we have a gap now. So 30.50 I think is up next, and then if we break that, probably going to head down to this 26, kind of the lower end of this consolidation range, right in here, right around 26 bucks. So that's what I got on PAS. Looks good to me there. And I'm actually shorting Barrick Gold now. And I've been long Barrick Gold for a year and a half. I've been pointing out to everyone in most of my videos. If you go back and look at my videos from a year and a half ago, I've been saying Barrick Gold looked like a screaming buy. It looked like a great thing to buy. And I made the case for a bullish case for it. And I was making the bullish case for Barrick all the way back in here. I bought Barrick right back in here, right at support. And I was buying it right in here. And, since then, from the lows here, Barrick has been up roughly 223%. So I don't want to buy Barrick up 223%. It's still in a bull market, so I'm obviously interested in the longer term. I'm longer term bullish in Barrick, shorter term bearish, longer term bullish. But I was very bullish in buying and building a large position down in this area. But it's made a pretty good move. So, I take profit when I make a good move, when it makes a good move like that, and I don't chase a move. A lot of people are getting into this thing now, a little too late. So need to pull back, I believe. And so as I zoom into Barrick, here's what we got. Daily chart, here's an uptrend line right here. You can see we're just walking up here. We broke right here, and it was an impulsive breakdown because we broke, and the next day, big gap down. So there's your sell. That was a sell signal, essentially. Kickback rally. And if I go to the hourly, the kickback rally is really nice because here's your kickback rally right here. It opened 3% up, I believe, that day, recovered the support line, but instantly within that 1 hour candle sold off back below resistance. So it was instantly sold off and rejected. The sellers were just waiting up there to either short or sell, and that's what they did. And then you had a little kickback rally back to support, and now you're rolling over. So that held and really showed you that this is this is being rejected right here. I think we're going lower. So we've got to probably head back down to 25, you know, it's about 26. I think we'll head down there, probably break that. And I think we're going down to this 22.60, maybe slightly lower, could be down to 20. I don't know exactly. I'll have to evaluate it as it goes. But I think we are probably heading down to this 22.50. And, you know, we'll just let gold bullion be our guide. You know, if gold continues to fall and Barrick falls, then we'll let gold hit support. And when gold hits support, you know, we'll see where Barrick's at. And one way to play this gold weakness, dollar strength in the short term, again, I'm longer term bullish on gold, but in the short term would be dust. And it's a 2x leverage gold miner bear fund. And you can see we had this falling price channel here. We broke to the upside, and it was an impulsive breakout. Because you broke, kind of muddled around a little bit here, and then you gapped up the next day. So that shows you it was a nice impulsive breakout. But then we've had this kickback rally, or a you know, a dip to support basically. Haven't quite, you know, it hasn't hit support. It didn't quite get there. Just fell to right about there, and then they bought it up, starting to go higher. So obviously we could, you know, continue to test support. We could fall down some more. Maybe the Fed comes out and spooks the dollar and rallies gold, and this comes down and hits support again. But we've broken out to the upside of this falling price channel. So any dips to support, it look to me like areas to add to a position and let this thing move higher. You know, profit targets, these are a little tricky sometimes, these leveraged ETFs, to find profit targets because they are, you know, there's decay, so they constantly will fall over time due to the decay. But, you know, we had pretty good resistance. You can see it's right about here. We had some resistance right there at 33.13. So I think that's a level that this could hit, you know, for a bigger move. Possibly, you know, yeah, possibly right in here at this $25 area. That's not as clean, only a couple reactions there. So we'll have to see. But, you know, 33 looks pretty good as a target for that trade. So that's an idea, trade idea, just my opinion. And we'll look at a couple sectors and ideas of things that haven't quite played out yet, but I think it's important to watch, because when the opportunity shows up, and it will, you got to take advantage of it quickly, because everybody sees the same thing. So everybody piles on and tries to grab that opportunity quickly. So here's XLV. You can see we're making this bearish rising wedge right here on the daily chart. So it's a bigger pattern on the daily. And we've just been wedging, coiling tighter and tighter and tighter. You can see right here, we're just at the apex basically of the wedge. Now I could move my trend line slightly on the upper side, so maybe there's a little room to mark it out. But this is on the hourly. This is, I can capture the most reactions with this trend line. Reaction here, you know, reaction right in here. So it's in the area. So I think we're going to get a break. Now this is a bearish rising wedge, so it tells me we're going to break to the downside. And that is what we're waiting for or looking for. Hasn't happened yet, so there's nothing to do. But again, we just have to sit there and wait for it. Here's XLF, once again struggling with its support line. It's been very weak. Now, if the dollar starts to move higher, XLF might catch a bid. And I'm not exactly sure how that's going to play out. But as of right now, we're just walking up support. Really weak at price action recently. It's just barely been able to move off the support line. Every single rally is sold into, but it's still able to hold support. You can see yesterday we actually broke. We actually broke that support. Now, if I go to the hourly to fine tune it, it's right there. So it's not impulsive yet. It's not something, you know, my trend line could be off slightly. So it's not far away enough to say, okay, this did break support, but you know, it's right in the area where it looks like it's starting to break. You've got a breakdown, a back test right here, starting to kind of muddle around and fail. The Fed might need to come out and save this and ramp the dollar up. So we'll have to continue to watch this. XLK just continues to run higher with really no regard for anything. Tech is just, you know, tech has just caught a kind of a auto bid, I guess. It's people are just buying it. They don't even care about anything. They're just buying it because it's going higher. So at this point, tech is pretty much just a momentum trade. It's being bought based on the fact that they think it's going to continue to go higher, and it very well may. This is interesting. Zoom. I mean, I bailed on this one when it recovered the support line. I was short. Looked like a good short, but again, part of trading is money management, risk management. You take a trade when it looks good, but if it changes and why you're in the trade no longer is there, you got to exit. And that's why it's so important to position close to risk. And what I mean by positioning close to risk, here's what I mean. Here's an uptrend line in Zoom right here. When you break that uptrend line, you'd expect to see a move down. So as I zoom in on the daily, here's your breakdown right here. So that's where you can short. You know, that's keeping your level close to risk. Now, if it recovers this uptrend line, then it's a false breakdown. It's a bear trap, and you get out. And if you position right when you start to break, when it looks good, then when you get out, you know, you take a 3% loss. And as long as your position size is not out of control, one way to do that is every trade that you take, maybe take the same position size around certain stocks. I mean, if something is, it depends on the volatility. Like Tesla moves like crazy, so you don't necessarily want to take the same size position in Tesla as you would maybe like an Apple or some sort of blue chip or something. So you have to evaluate the volatility of a stock. The more volatile a stock, usually the smaller position size. But you know, if you keep your trades in a relative unit sizes, then you know 3% loss here, 20% gain on a winner. You know, it's all about risk reward and keeping your winners bigger than your losers, basically. And so this one recovered. Lots of bear traps in these things. So these momentum stocks, these stay-at-home stocks that have been just really on fire, you know, you're getting some bear traps in these things, and you know, that's to be expected. This is the first breakdown. It was a whipsaw. So now we look for the next breakdown. You know, when the next breakdown comes, maybe that one sticks and from a higher level. So could be even a bigger, better trade to the downside when it breaks. But as of right now, there's nothing here. It's just continues to be bullish. Same thing with DraftKings. This one's starting to break out too. Here's your uptrend. Here's the little breakdown. We caught the short trade on this. It was good for a 20 or 30% gain. But you know, as you can see, it was walking resistance, walking lower, but holding up here at the resistance level. Finally, it broke out. So here's your breakout. Here's a back test right here. Held that support on the back test, and now it's running higher. So, you know, we'll see where this one wants to go. I don't see a trade right now. I don't, you know, but this could have been a big bull flag. You know, here's your flagpole. Here's your bull flag, and maybe it wants to continue to make another huge run higher. I don't see that happening, but we'll just watch it. Okay, that's all I got for this video. I didn't put out one yesterday because the market isn't really doing anything. It's just kind of grinding higher. Oh, one real quick update. I did cover my Adobe short. Here's what I didn't like, and I want to show you guys. Okay, so I entered the trade as a starter position, and I like to enter trades as a starter position. Typically, I don't take a full-size position unless I'm seeing multiple confirming indicators and, you know, charts. So I took a starter position here on the breakdown. It looked good. It did a back test. I added to my short position right here on the back test, and everything was good. That was my position. We started to break down, but then we did this move right here, and to me it looked like a stop raid, and so I didn't cover that position here. It then sold off, and I was expecting it to break down, but it didn't break down. It held. One little candle right here created a whipsaw or a bear, you know, kind of a bear trap essentially, and then it started to run higher. When it got back up into this area right here where it was at previously, I covered my short right here. I didn't want to see this stock right in this area again. I didn't think it needed to be there or should have been there, and it was. So it didn't. I didn't have a reason to be in this short as of right now. So I still, the trend is broke, the uptrend. Here's the rally trend, but this could do a back test. And so if it wants to run up and break and maybe do some impulsive back test, I'll look to short it up there. Until I see further bearish signs, because we didn't get the break right here or any one of these multiple tests, we didn't get the break. Maybe it wants to do a back test. I don't want to ride this short for this, impulsive back test. So I'll look to short it on the back test if it's going to do that. Or if it's going to break support, the support right here, if it wants to start to break this, then I'll look to short it there. Until then, went ahead and covered. Pretty small loss. I didn't really lose any on my added position size here, and I only lost a little on my starter position. So that's the name of the game. Keep your losses small. So I had to exit that one, and that's all I got for the video. Thanks for joining. Leave me a thumbs up. Leave me a comment. Appreciate it, and I'll catch you guys on the next one.